Okay, folks, video 2 of 2. We have the GDX. So I went short the GDX and the GLD. I suggested a short idea in the last couple of weeks, and I believe it's still okay. I personally didn't have it in my portfolio because I was in a different trade that resembled it, but it was a trade I would have taken. I would not have bailed on it. You might see a spike in gold, but technically you do have a seller at the highs from Thursday and a buyers at the lows from the day before that. So within one day, within 24 hours, they gave us an actionable low at 29-ish and an actionable high at 31-ish. Which one will breach first? If they lose the 29-ish, the low from last week, they will get to 27.80 pretty quickly. In other words, there's not a lot of support down in this area. So if you're a bear and you need a drop to win, which we don't, you want them to lose. If you're a bear and you have my position, you just want them not to break out, which is a different request, right? My request is easier. I am open to the upside. If they take out 30.8, they might get to 31.8. Reach out to me if you need help managing a position. GE, I cannot believe the stock, the exuberance, the love that Wall Street has for it, I think is misplaced. But for now, it is in the hands of the buyers. Look at this. And why do I say this? Because if you zoom out to a monthly chart, you will see the past glory of GE. They're streamlining the business and they're shedding businesses. They're down to 3 major ones now, I think, because they sold healthcare. Aerospace, I think, is the biggest chunk dollar-wise. So do your homework based on that. Technically, this is not a starting point for GE. So if it's not a starting point and the stock market is not going to hit pause, then it's probably time to get out of longs if you're trading. If you're investing and you believe in the glory of this company, you might want to revisit the fundamentals. Let's pick them up really quickly. I'm not going to be nice about it. So I'm going to go to statistics and see what its valuation is now relative to a few months ago. One way to value a stock that's mature is PE. I don't think with this one it's pretty appropriate because, well, let's say it is, and this is a quarterly. Let's go to an annual. You can see how it goes in and out of having a PE or not, and it is on the high side. Looking back a couple of years, it is the highest point looking back 4 quarters, 5 quarters. So that's one way to measure cheapness or expensive. Then if a stock is growing a lot, which this isn't, they're actually shrinking a lot because they're selling businesses. So it's unfair to do it, but let's do it anyway. Price to sales. So the stock price relative to the revenues of the company per share. And you can see it's never been this expensive, at least if you look left on what's on the board. In 2017, it was 1.28, which means if you buy a share, you're giving it 1.3 years, which is pretty cheap, right? And now it's 2.9. So it's more than double what it was before. So that's pretty expensive relative to itself, not in absolute terms. NVIDIA is like 40 almost, but that's NVIDIA and it grows very, very fast, so it will normalize. So I do have concerns. Management seems to be fixing past management problems. So I'm harsh on it. If it wasn't spiking this way, as if it's like the best stock ever, I wouldn't be harsh. But what I'm saying is that this price action doesn't match what I see in the fundamentals. So you better have some good knowledge and conviction of what's going on in the P&L before you commit longs here. Shorting has been very difficult and a losing proposition. So there you go. This one, I don't know why you would be looking at it anymore. Guardian Health. Wall Street hates it. I would not touch it. Look at it. Wall Street is telling you going out of business. A lot of spending and not a lot. The losses are growing faster than the revenues. So pretty dangerous stuff. If I'm long, I would not add to it. Fundamentals seem to no longer matter. Well, they will matter when the you know what hits the fan. Who is this? Oh, GLD. Same conversation as GDX. So GLD is spot gold price, basically the price of gold. The GDX that we saw earlier was an ETF that includes gold miners. So if the stock market falls, the GDX will fall. If gold doesn't fall, GDX will continue to fall with the stock market because they are stocks. This one will hold up with the price of gold. So it's somewhat independent of what happens with the market. Somewhat, okay? When risk prices out of the market, it comes out of everything. We don't have that situation right now because the government guaranteed us a bailout everywhere. So the GLD is more bullish than the GDX for that reason. But if I took a credit call spread, I would not bail out too quickly. Reach out if you have specifics. It's a hard place to start long. You do have support at 199 and a high from Thursday. That's what you're playing with. If you lose 199, you're going to come down to 196 or 195. Would make a better entry point if you want to go long. Google. So last week, I put focus on 3 mega caps, and this was one of them. And oh boy, did it deliver. The opposite of Apple. It's more like money that's coming out of Apple going into Google, which is appropriate because we had a headline in Google here, which is the risk. Okay, headline. Gemini. I don't know how to spell Gemini. Right? What is that? Their AI. There was a headline, rumor, that AI, Apple missed the boat in AI. We all know that. And they were going to license or use Gemini somehow in their back end. Can you imagine iPhones powered by Android type of a deal? That'd be a stick in the thigh for somebody who's a purist of Apple. But that is the spike. So here's what's going on now. We have a headline brewing. Neither companies validated or denied it. So that headline is still outstanding. So I sent a Google short on Friday or Thursday saying, hey, it might be an idea to sell a call spread in Google because it's failed here a few times, and I would be betting again that might happen again, or at least they won't break out. But you should know that if the headline comes out, Google, yes, confirms the rumors from last week or 2 weeks ago, or Apple, yes, confirms it, or some expert regurgitates the same headline because they got long Google, and yes, they do that. If you don't believe that, then you have another pop in Google coming and a drop in Apple. So maybe there's rotation from Apple to Google. There is a weak point in the chart at 142. Starting points here. If you get long, you're hoping for a breakout. Just make sure you put a stop, okay? Every time I see this word, I'm thinking hummus. I don't know why, but it's Humana. Maybe I'm hungry. It's too early to be thinking about hummus. I had some last night. Okay, so 360 is an area where sellers should be heavy if you rally into 360 in Humana. Something happened to the stock and suddenly it became very bearish. Look at them selling lower highs and lower lows. It's like the opposite of the market. If I flip this upside down, it looks like the stock market. So be careful. You have a lot of sellers above and even more sellers above that. It's going to need a headline to spike through all of these. Otherwise, it's going to take a long time to recover. And think about it. Markets are at all-time highs, and this is what's going on here. So I'm going to put a line. And if they, for whatever reason, it's not my forecast, but if they do lose 333, 332, you should say rut roll, because it's probably going to go to 280, 270, 260. Not my forecast, but I'm going to tell you that if I'm long, the reason I'm saying that's trying to scare people. If I'm long, I should not add here. Because if it bounces, then I did not need to add. And if for whatever reason they lose that line of 331, 332, 333 area, it's going to lose another $40. So be careful. Immunomed. No. In mood? What is this? In mode? We discussed it in the live room. INMD. You better hold the lows from last week. That's all I got to say. You do have buyers, strong support at 20. Again, if you lose this 20, you might lose this, which is probably 19 point something, and you will end up at 1850. You do have a trigger above 2170, but it looks like it's easier to lose this one than to take that one out. But that's the case. You have support, you can get long with a stop. Trading, in this scenario, I would be thinking to get long here, that support holds, and to see if I can do that. That's the trader mentality. But the trader mentality also says, if I lose X, I'm out, because that's just too much pain. And in this case, you might want to stop out at 1980, 1975. Like this one is a little bit too low. Gosh, what is going on with my trigger finger? I bought a new keyboard, so. All right, so this is kind of the scenario. Okay, Intel, what did they do again? Who's Intel? Yeah, exactly. I'm making a point. Nobody remembers Intel anymore. Not a stock I would touch, honestly speaking. NVIDIA just demolished them. Jensen Huang, genius. Intel management lacking. If you lose 4150, you're going to 39. So I would not get long Intel. If I am long Intel, I would not add. If I want to invest in Intel, I can't blame you. I'm not saying it's going out of business. I'm just saying it doesn't have what the world wants right now. Okay, so if I'm looking to invest in it for the long term, you can nibble on it. That's always okay. Just what's not okay is when people go all in at the same time. Like I've had people say, I'm stuck in Intel from 52 or something, or 47. How many shares did you mean to buy? They bought all of them at the same time. So now they're stuck. If they decide to add, they're making their problem bigger than originally designed. That's not the right thing to do. Okay, so that's not a forecast. That's a warning. And you have sellers that you can move it over to here. And where is it? Everywhere. Anything above 44, look at it. It's a mountain of sellers. Support, yep, that's still there. I'm just moving things forward. And that's why we haven't lost it. But real support now is like stuff that we haven't touched here. However, this is doable. And this is while markets cannot stop rallying. That sentence you have to put at the end of every chart you review. Iron Mountain, whatever that is. Okay. IT stuff. Great stock chart. PNL flat. Another one of those mysteries. What's going on? I mean, it's not a bad chart, but not a bad company, PNL wise, but the chart looks pretty frisky. Let's go to short-term comments. I don't know much about the company, so we'll talk about the charts. 77 needs to hold. If you lose it, you go to 74. You do have a trigger above Thursday's highs. If you take out 81.50, you probably will take out 82 and end up at 84.50. So those are the trading comments. I'm not qualified to make an investment comment on it because I don't really know it. IWM, I will have more to say about this in tonight's video. I always do. SPY, IWM, QQQ. I can tell you that it closed at exactly the battle zone we've been watching for 2 years. 2 years. Okay. The way it closed on Friday was pretty bearish. So I will be looking for those selling points. 207, 208, and of course 209. And if you look left, they placed a pretty big high one day at 210, 210.50, something like that. So the question is, this week, will they lose 199.50? They bounced off of 199.50 this week, down here, ferociously because they knew what would happen. Did you see this, by the way? Are you impressed with this guy? Why? Look at how close we came to the target. So I'm going to push this left to tell you that's not the forward projection, although it can happen again. That is what we said would happen. Look at it. One party hat, there it is. Another party hat, there it is. And a dip. And this was the target, and that's how close we came for just freehanding in here. And I probably freehanded in one of those videos. So pretty good forecast. And it may repeat itself. So if I take this and I copy it over, and if I could delete this part, I would watch for the second bounce here to see if it repeats itself. So will they fail inside this box or not? That's what I'm looking for the IWM. Okay. JP Morgan, I'm short, and it had a weird tick late Friday. If you guys were watching the market, the XLF took a dump, and I look into it. Somebody said, whoa, JP Morgan just fell hard in the live room. And it matches this candle right there. This candle came out of nowhere. They went up above it, and then this candle came out of nowhere. So I'm going to draw a line at 197.50 saying that it matters, 198. Let's see if it goes to 193 this week. I do have a bearish position. It is red, debit put spread, which I shared. But I think it has enough time that we have the chance to bail out of it. So I'm still in it. I haven't done anything on it. In fact, I looked at it twice only because people asked me about it. I shorted JP Morgan based on fundamentals. That's why I'm not looking at the chart as much. It is way too expensive from a price to book basis, and that's how they price banks. Kimberly, buyer at 123, seller at 126.50. Ping pong inside that range, 123, 126.50. KO, in other words, in Kimberly, there's nothing to do on the short term. Coke, so it is still an ascending channel. I'm not sure I need that. Dips, they're buying dips. Look at this. This like copy paste. These 1, 2, 3. But there may be more. And let's say we copy it one more time and buy the next dip. Basically, they bought it here, arguably. So now you want to see, are they dipping like this? Are they sell the rip mode? And if they are, we'll be able to lose support. So you're closer to resistance than support. Don't know what to do with that, honestly speaking. I don't think it has enough premium for me to sell puts and calls and things like that. So as an investor, there's nothing to do. You have support and you have an opportunity to break out. Maybe the question is, while markets are topping, is this a top? If it is, and I'm an investor, I wouldn't start longs here. You will have an opportunity to enter. If that's a giant if, down in this zone. If I'm an investor, you could do, which is not a lot. Wow, it's only 4%. Okay, so this is a trading comment. I don't know what to say about it as an investment. Lee, EV play. Falling into support, technically you could get long into this bunch of buyers if you can withstand pain from here to 26. There's a gap at 29. Personally, I wouldn't invest in this unless you know it. So the PNL does not show cracks. So maybe it is a good investment. So you need to do homework on it and its prospects. Technically, you have support. So if you got long here, it's too late to panic. If you're looking to get long as an investment, take half of a position. And if it falls to 17 or 18 in the next 6 months, add the second half. Or sell puts to own shares. We don't need these lines. Okay, at one point, this used to trade with Tesla tick for tick. LMT, nice recovery, but now it's going into a prior fail. So between here and 452, I would exit. This is an exit point. How would I trade it? I wouldn't. I tried trading it for us. We did trade it successfully a couple of years ago, within the last couple of years. And it was several credit put spreads, credit call spreads, and iron condors. And it was hard to get fills on it. So personally, I don't like to trade it. Plus, it lends itself to headlines, war headlines and things like that, even though it's not all about war. But as you approach 450, it's an exit. Don't know this. Lattice semiconductor, stuck in the middle. You have strong buyers below through 73, strong sellers above through 85. I would contend that 82 is going to be difficult to be overcome. So be careful going long into 82. Okay. That is a pretty important spot. So is this one. And 70 would be a target. 70 to 68 for me. Enter there. LULU. Buy the dip. I promise you, we tried to buy the dip, but gosh darn it, we cannot get a good quote. And if you zoom out to a monthly chart, this is a monthly chart, not really important for many people. Weekly chart, it's falling into super strong support, but that doesn't mean it cannot go to 350. What? Another 50 bucks? Again, I say it this way. The markets have never been higher. Why is this one failing to rally, right? So it is on its heels, and it's easy enough to see $50 drop. Now, technically, this red W, the target 1 is 385.88. Target 2, you're not going to like it. It's 280 of that red W. Target 3 is like 230. So over the next few weeks, this one is vulnerable. That's all I'm saying. It's vulnerable. Imagine if they lose the low from this last week. Oh, it will never do that. Really? What if the market drops 3%? Just 3%. Where would this stock be? I'm just saying, it is a catchable falling knife, but it's not a bargain. This one also is a catchable falling knife, but I'm not going to touch it because it's an airline, and other airlines are up here, and this one is down here. Vulnerable. Oh boy, was I right about that arrow, right? I wish we had timed a good short on it, but that was a disaster. Now, LUV better hold 2780. Let's say 2750. If it loses 2750, it's probably going to 2550. You should probably put an alert here. I don't think it can take out 30 anytime soon. And if it goes into 30, that would be an exit area. 30, 31. LVS. Caesar was earlier. Do these two trade together? They have earnings within a month. This is a bearish chart. It is support. It is working. They did curl, but they couldn't do anything with it. These R's worked out, so we can move them to the right and reuse them again. And this stock is falling into support at 49. So you do have a support zone at 49. But here's the bad news. If they bounce off of 49, I think they failed to take out 51. So what am I saying is that I don't know if I would hold calls, and if I do, it's just to profit from this much. I think this is going to be also resistance. All right. And any drop to here, use it to exit on the bounce, because you might do this. This is a real path. It's either this way or this way. I think there's a good chance, reasonable risk of being at 47.50. So lower lows and lower highs might continue. That's all I'm saying. It's not a short idea. It's an idea to manage bullish risk. Okay. I don't know what this is. Madrigal. There's a good restaurant called Madrigal in Phoenix. Okay, so if you lose 236, you're going to 200 or 210. And rallies will be met with sellers, which it could happen. It could. I wouldn't hold puts in this one. It has a strong support and upside potential. And you do have resistance at 265. So this one has support to bounce, but it will face resistance, and it's a trade. I would not get married to it, as they say. Meta is just, don't short it. You're either long or you're not. Technically, it should come back to 380 at some point, but oh man, does it need a bad headline for that? Because right now it's rallying based on a concept that we won't have any tangible parameters for it for another year maybe, because they have a super successful current business, and they have proposed that they're changing the company completely to a different business that they haven't even they haven't even finished. So whenever they tell us, oh, we're almost finished, imagine that stock. Don't short it. Walk away from it. If you're tempted to short it, just short the S&P. It's easier. MGM, Caesar, MGM, and that other company as well, going into resistance, going into prior fail. Not a good starting point. If it rallies to 45 or 46, I would exit. That's a stopping point. Look at it. So I would put a box up here and say sellers. Like there are sellers waiting up here. Okay. And just like there are buyers below, I would put buyers here. So it's support. If it falls into this area, tend to go long. Anything below 43 will find buyers. Anything above 46.50 is going to find sellers. So ping pong. 3M, nice recovery. Oh, was it nice recovery? It was on my to-go long list forever, and I never did. So that was nice. I wouldn't start longs up here. It's just too violent going into prior fails. Technically, that's pretty exciting because if you take out 111, you have the opportunity to go to 124. But is this the type of stock that would do that? I'm not so sure. So the question is, was this a bottom or are we here? Watch. So if we were here, if we bounced off of here and then it looked like it was the end of the selling of lower lows and lower highs, and then it reverted and made a lower low. And this is another bounce. So it is imperative that they go above 113. Then you would probably have left this lower highs and lower lows. Because the way you do it usually, you have a lower high and lower lows, and then you stop making lower lows, and then you break out of a higher high, a significant higher high. So if you take that out, then you've bottomed. And now you can build another ascending channel of buying dips inside that. We don't have that evidence, okay? We could be here. Look, we bounced hard, we made a higher low, we bounced hard, we made a higher low, and reapproaching 3 prior fails, there they are. So these two scenarios are very, very similar. So we're not out of the woods, but it's great improvements. If you were trading it and you caught a long on it, I would be out as a trade. If you're an investor, that's a different story. Whoa, my gosh, what is going on here? That is a descending wedge if I've ever seen one. Exactly the opposite of the market. So it fell into super long-term support from the pandemic. I'm not so sure I want to be long this thing, but you definitely do not want to be short this thing. If this thing breaks to the upside, it's going to go to 16, 18, and 21. I think it's not doable. 15 is going to be a problem, plus or minus 10 cents or 20 cents. Okay, anything above 1480 is going to be a problem. Be realistic. Study the company on that other one. This one is, I would get rid of it on rallies because it does have support through 395 and a lot of sellers above 450. So if you get that bounce to 450, I would exit. Trading comments. Microsoft, short it. Well, this chart suggests that it's easier to get to 418, 419 than it is to break out, although we are like right there. So the way I would trade this chart, not the company, forget that it's Microsoft, I would have a debit put spread or a credit call spread or both with a stop. If it goes to 434 on a closing basis, then it's probably a bad idea to be short. But for this chart, it is vulnerable for a dip. So I will put an arrow here saying T1. Okay, and I will put a line where I would stop out. So that's what I would do with this thing. I would not hold calls unless for a specific reason. Let's say you have a different time frame you're trading and it shows some sort of a ABC move to the upside, then do that. On the 2-hour chart, it's vulnerable for lower prices. It will follow the market, and this is a short week coming. Micron, I am short, and I shared it. And we were green, then we went red, and then we went really green, and I didn't look at it before the close. So it's greenish, flattish. I'm short via put for long term, I think July. And it's one of those things where I disagree with the price action given the P&L. It's not a bad P&L, but it's just not great. So I need to see another 50% growth in their bottom line before I give it up. Technically, this is a short for me. Technically. All right. Netflix, avoid it. There's nothing you can do with this thing. It is too volatile. If you're investing, then you don't need me. You have your own thesis. And if you're trading, you're going into a prior fail on a long-term basis. It's still not a reason to short it because it's a different world for Netflix. Wall Street, the CEO may have convinced Wall Street to look at it from a P&L perspective, not from a how many people did you subscribe? So that reduces the chances of big drawdowns because the P&L is somewhat stable. The number of subscribers is not. So the stock, it's going to take a lot more to be able to do something like this with the stock. I wouldn't short it, but if I was trading it long, swing trading it long, this area as an exit point zone, not point, zone. Nike, I could catch the falling knife, but just like the other stock we discussed earlier, was it LULU? I just couldn't find anything attractive. In order for me to find a credit put spread that I wanted to sell, I had to go out a couple of months, and I wasn't ready to do that. Good company. I think rally into in 98 is going to be sold, and it's going to dip back down to here. Now, if somebody is investing in Nike for the long term and they nibbled on it, not add to current positions, like started positions, that's okay. But I want you to see something. Excellent support at 88 and change. Even better support at 82 and change. Let's say the market corrects and it loses those two. It's going down hard, and I mean like hard, like test these two maybe and lower, but that's not an easy forecast, but it is something that investors for the long term need to consider, so they don't pile in all in. That's the only thing I'm mentioning this. So if I'm investing for the long term and I wanted to buy 1,000 shares, I would only buy like 400 or 300 right now, just in case. I will have time to add more to them. That's the only reason I mentioned that. Strong company though. I wouldn't short it here. Energy, I wouldn't go long it here. What is this? Look at the P&L. What the hell, people? Oh my goodness. Yeah. Truth. Fundamentals do not matter anymore. Yeah, I wouldn't touch this. I don't know what this is. Engaged in production, sale, and distribution of energy and energy services. Could you be more vague? All power plant activities of what? Domestic and international what? Renewable. Okay. Yeah, I don't know what that is. But clearly, it has upside potential that is not playing out right now, because that P&L, oh my gosh, that's even worse than ANF. Okay, just be careful. Is this an all-time high? It better be. It is. Yeah, I don't know what you want from me. I have no input for you from the chart, except that this could be a target zone from an ABC move once they broke out of 55. That's a target. That's the only thing. So if I'm a trader, I'm out. I hit my target. Nucor, same thing. Is that the same business? No, look at this P&L. At least you can justify it. The P&L is up, and away. And, oh, all right. So it's breaking out into all-time high. Momentum traders only. If you love it, do that. If you're investing and you're now starting to go long, I wonder why you're pending in to get long now. NVIDIA, same. I had a discussion with somebody yesterday that owns 1,000 shares of NVIDIA. 2,000? 1,000? Anyway. And they made a lot of money with it. And they said, oh, you can't believe how much money I made in it. I made like whatever they made. I'm going to throw out a number. $75,000 in a couple of weeks. I was like, you haven't made anything yet. Have you booked any of them? No, because you haven't made anything yet. So I said, where are you going to get out? Oh, this thing is going to the moon. When? I don't know. Okay. So he's an investor. So I suggested he would sell covered calls against it. And I think he started to get the concept of covered calls, but he's not going to do it. I know he's not. So I would watch NVIDIA. Will it make a higher high? If it does, then it's going to crack 1,000. I mean, it's so close to 1,000. I couldn't believe the first time they came so close and they left it on the table. So they might push for it. If we have a green week, they might push for it. So watch for NVIDIA. Dips into 890, we'll find buyers. Anything below 880 should have buyers. They fought over it for about a week. And if you lose that zone, you're going to go down to 800, maybe 780, just from volume. So you have an upside potential of a breakout, and you have support below. And if you lose the support, you might slip a little bit more and scare people out. Okay, so I would not short NVIDIA. I could sell calls out in time, but I would not short NVIDIA. If you short NVIDIA, it's probably much easier to short the market itself. As an investment, no one can argue against it. Look at the P&L. If you look at the P&L, the net income now is almost double what the sales were. Think about that. Now the net income is almost $12 billion. Okay. Quarter four of 2022, quarter one of last year, the sales were 7.2. almost half as much as it has in net income now. That is mind blowing. I don't think anyone has ever done that at this size. That is an outstanding growth path. So you can't argue with that. NXT, that's a long consolidation period. So two things. When you break out to the upside above that consolidation period, you're going to rally like $9. But if you lose it, you're going to break half of it. So if you don't break out of this, you might break out of 62, you might end up at 51. That's what I'm saying. If you break out of 62, you may end up at 70. That's also what I'm saying. So make sure to know when the headlines are, because that's what tends to make it. Not an obvious long-term entry point for investors. Open, that's a real estate trade. I had a huge real estate discussion last night. You can tell I went out last night with friends of different industries, and I always pick their brains. I specifically asked this guy who's in real estate, commercial side real estate, and he said he's raising alarms. Occupancy rate is soaring, like open space on the commercial and the industrial side. And he said people are stuck with loan. There's going to be a lot of defaults on the commercial and industrial side. I don't know how that will spill into the regular real estate side. So we'll see. That's why I think Powell and company are promising cutting rates, not because the economy needs it, because they're trying to bail out certain sectors from future problems, including the government's sustainability of its own debt. So now I think I understand a little bit more of that story. This is an area of sellers, and you do have support below. So there's nothing to do here. I would not buy calls. I would not start longs. I could start longs by selling puts or put spreads. I would avoid earnings. Do homework on the company. The P&L is demolished. Look at this. Look at the sales now and the sales back then, and think about NVIDIA. So this is a scary proposition here. Make sure you study it well. I would not add to current positions. Oxy, we shorted Exxon and we're still okay. We already discussed this grab for energy, and the Oxy proposition is, will it come out of 68? I'm going to tell you something. I'm worried about Warren Buffett and his company. He's piled into Oxy up here, and half of his positions, half of his assets are Apple, which is the only mega cap that is in technical trouble when the markets cannot stop making higher highs. And he's knee deep in both of these. So I am worried about Mr. Buffett. That's why I'm short Berkshire stock, BRK.B, which also is the heaviest spot of the XLF. Like 13% of the XLF is Berkshire, and then JP after that. So side conversation, but it's important. So Oxy going into an area of prior sales. So you see that white triangle or rectangle on the left and the circle? That's still there. I'm just going to move it forward. See that white rectangle? It's been an area of contention. We've seen upside in the past. It's going into a prior sale. I would not start longs here. If I was long, I would be exiting, just like Exxon. Palo Alto Networks, hard fall and huge bounce. It's got a lot of support below 270, a lot. So if for whatever reason it falls back to the low here, I would nibble long, even though I have an arrow down to here. But I want you to know that when I put this arrow, the conversation was like, if we have a crash in the market, that's that thing will do. So it's not an arrow to act on. In fact, I would go long into this zone and stop out if we lose it, because you don't have recent support, and the support is scattered through 224. So yeah, if I go long, there is support at 275. But if you lose that, you end up at 252. And if you get there, you trigger this and you end up at 232. So we could drift in a lower low, lower high trend. That's why I'm not recommending longs here. Rallies will be met with sellers, and it's easy enough to drift lower. So I'll visualize it for you. Let's say they do this and somehow they lose that. That's the path. And if that's the path, they're going to trigger that one. That's the target. So I think this here, if the market's correct, is doable. Maybe I'll lift it a little bit higher. And there's a lot of resistance up here. And it's scattered. That's why it's a big R. That is a Fibonacci zone, golden zone. So Paramount, huge spike and gave it all back up. They have great shows. I recently subscribed to it. It's not popular. They said it should shut down, but I disagree. They have really great shows. But if you can't bring in the subscribers, then you got nothing. So Paramount, you do have support at 10 point something. And if you lose that support, you're going to 8.5, 9, something like that. And that spike placed an area of contention. So it becomes, yes, it's a trigger up, but it also becomes an insanely difficult thing to do. And I want you to look left. And if you don't believe in the technicals of charts, maybe this will make you believe. What am I doing? Look at it. I mean, you can't make that up. You cannot make that up. It's to the penny, like not 1 penny off this area of contention and where they fell apart. So if you don't come up and bounce off of it and get to 15, that is a wall for a long time to come. So be careful. I'm going to put this on a global basis so it shows up on every chart. Okay. PENN. I do like it from an investment perspective. That's why I said to go long. And if somebody did via shares, I think they had a little bit of greens here. If somebody bought calls, they're losing money. I wouldn't hold calls. When I wrote it up, I said shares, but somehow they posted it as calls only, where I would have bought shares as an investment and half a position tops. That was the write-up. And this is a head and shoulders. Technically, it says it can go to 15. And if it can go to 15, it can then drift lower, lower highs and lower lows. On top of it, you say that the market is toppy. And if the market did top, this one is definitely going much lower. So here's the action. If I own shares for an investment for the long term, I don't do anything if I did not take a full-size position. But if I went all in, I would stop out. I would buy puts or do something to protect them, sell covered calls. If I nibbled for a long-term position, I wouldn't do anything. Let's say the position gets cut in half. I'll add the second half and I'll wait. It'll be just an investment. So it's okay. I wouldn't do it now, knowing that the markets are still teetering at all-time highs and this one is not doing well. But I would sell puts to own shares. Sellers at 1850, 1950. Let's say you get to 21, I would exit completely. Now, if I'm long and I'm regretting it, the next spike, I would use that to get out. Pinterest, drum roll, please. My goodness. Whoa. If you lose 33.50, you're going to 32. This thing, repeating itself right there. I don't even need to draw it out. This thing, these things. I don't even need to make new lines. Just copy paste. Lower highs and lower lows. Look at this. What? Look at that one wick down to here on one day, down to 29 from 40. Whoa. My goodness. You think they're tracking that? They're going after it? Yeah, I would not hold calls, but it is tradable. So if somebody goes long against this support, that is a correct trade. Just make sure you put a stop. Okay, and the bounce could get you to 35 or 36. Trading wise. All right, we're coming to the third video.